Hey, what's going on, everybody? Welcome to this week's Weekend Prep and Review, where we review the week of October 5th through the 9th and prep for October 12th through the 16th. I know it's been a while since I put out a video, and for that I apologize. I've been a little busy. And so, yeah, I'm sorry. And we'll go ahead and get started. So, for the month of October, so far I'm up $3,313. And just for last week, I am up $2,452 for the week. And we'll go ahead and review those trades, see what the setups, how and why I did what I did. So on the blue, if you're not familiar with TraderVue, where here was blue, just shows that I entered 3 trades. So we'll go ahead and look at those. So you see on Monday, October 5th, I opened Chewy. It was an 11-day day till expiration bull put that I got for $95, and I ended up closing it out for 50% of the credit received, and I'll go over why. So the reason why I got in was, so after I enter my trades, if you don't know, I screenshot the charts and I document how and why I'm doing things. So this white line, and actually let me make it larger for you. This white line is the 21 EMA, and this purplish line, or magenta, is the 34 EMA. So what happened, the reason I entered this trade is you see price pulled back to the support level and bounced through the 21 and 34 EMA, and then it held for 2 days. So after I saw it was holding, that's where I entered the put credit spread, expecting price to hold up. See, I forgot which one I even sold. So you see at 9:42 in the morning, I sold the 55 put and hedged it with the 52 put. So price just has to be above this line going into the following week. And right here, so you see all these moving averages, the not really dotted lines, but the broken lines that's the same EMAs. And then you have the green line, which is the 20 EMA, this blue line is a 50 SMA, and this other purple one down here is a 200 SMA. So it's sitting on top of moving averages. And all I was wanting was price to stay up, and also down here there are spikes in volume when it's in those moving averages, and so I was expecting that level to hold. And then if you go down to the squeeze indicator, all the EMAs on the weekly are stacked bullish. It's slightly broken on the daily, which is the middle chart. This is the daily chart right here. And the yellow line right there is the 8 EMA. You see it is slightly broken, but it is starting to come up, and the momentum is starting to come higher with the squeeze also present. So anyways, yeah, it stayed above it. Volatility actually ended up contracting, and I was able to close the position for 50% of the profit. I closed it for 50% because of how sensitive the market is right now politically. The polls could say one day Biden is winning, the next day Trump is winning, and that's going to sway the market to go one way or the other. And so while it's super volatile right now, I'm going to go ahead and just take it off at 50, but I normally take it at 70. And if you want to look right here, and here it is on the day chart where you see where I actually entered. If you don't know, those triangles indicate the day I entered, and these triangles indicate the day I closed the position. So I was in the position only for, we'll say, 1, 2, 3 to 4 days before closing. So if I would have held on to it, yes, it would have done much better, but it's all right. I'll take 50% instead of a loser. So that's Chewy and PayPal. PayPal, I was looking for a short trade. Oh, also something I should go over on the way I do these trades. So I was only risking it $250, and I ended up making 471 or 48 before commissions. So that's close to a 2-to-1 risk reward, especially for a high probability trade. Maybe one of these days I'll put out a video and explain in detail how I do that. But here is PayPal once again. Got it for 50%. This one I did not like how it was acting. So same concept. Price went up, came down, retested it, and it was going above. So I entered a credit spread for that week. So in this, what I liked it, the reason I liked it the reason that it sparked my interest the most is because you started to get the blue candles on the squeeze indicator. So whenever there's a squeeze and then the momentum starts to shift higher, that's a good indicator that momentum's gonna go high or higher. And I also sold the 190, so all I needed price to do going into the next day is to stay above this candle's low. That's basically, if you want to think of it in the simplest terms, is I'm saying next week or going into Friday is going to stay above this candle. And I'll go to the bottom. Actually, it actually just ended up chopping sideways, but I was still able to close it for 50%. That's one of the benefits of credit spreads. It literally, well, think about it, literally just went sideways, but I still got 50% of the credit. So just something to think about. And I got in for 50 cents and ended up closing it for 25. And SPX was a hedge. I'll go over that where I closed it. All right, so Wednesday. It's where I opened Visa, but closed my ADSK. So Visa, I entered a 9 days to expiration bull put spread for $2 and ended up closing it for $1. So I locked in $1 worth. So this one, EMAs are stacked very positive on the weekly, on the daily. Price came down, bounced, consolidated above the 21 and 34 EMA. So as it was consolidating, I can see that support is obviously right here, and so that was going to be my stop. And so with my stop being right there, my risk was $250, and I ended up locking in $591 after commissions. So yeah, this is the squeeze. So like same thing on everything. It's not trying to sound repetitive. It's just I follow the same setup every time because I know what works for me. So you got the squeeze indicator right there. You got the squeeze. You got the momentum shifting higher. You got the moving averages holding, and I'm just looking for it to go up. And also this red line right here is support. So you see that there is support right there, and that's also that was holding it up. It gapped up, and I waited for it to pull back to the support on the 5-minute chart, and that's when I entered my position. So sometimes, if the market allows it to, so I was watching this position, it gapped up, I waited for it to come down to support, and then got it up like I just said. And also, so here it is. This one I was also just in this trade for 3 days. So when I first got in this trade, this was actually one big red candle. And then luckily into the afternoon, it was bought up, and then it went higher. And I actually show you. That doesn't exactly show how red it was, but you see it dipped down and then it entered as it spiked up. So yeah, so it got 50% on that one. ADSK was an iron condor, is a 10 days to expiration iron condor. I got 83%. So how this setup works is what you look for is you want yellow 10x bars, which means there's no direction. Or no sense of direction anyways. And then I'll explain this actually right now. So, and then I also have all the moving averages. You see how they're jumbled? That's what I'm looking for. I can see that there's support right here, obviously, and obviously resistance right there. So I'm expecting it for 10 days just to chop around. And these turquoise lines, those are break even. Those are the break-even levels for the position. And what this chart shows is, if you can look, you see that red line that's right underneath the blue line right there, and then the green line that's right there. Well, what that tells me is, if you look right here, so in the last, see that right there, in the last 268 2-week rolling period, so that's 5 years. The last 5 years, this stock has closed within the H1 and L1, which is high 1 and low 1, basically 54% of the time it closes within those levels. So what I like to do is I'll sell an iron condor within those levels with a statistical difference, or I guess not a difference, but a statistical analysis that shows that it moves that much statistically, I guess, if that makes sense. That was a little difficult to say. But you see, as you go through the week, as it shows right here, it really did just go sideways and locked in 83% of it. And so yeah, I was risking 400, ended up locking in 556 dollars. Everyone Chewy went over PayPal. All right, because that's where I closed those. So we should have talked about that. All right, on Friday, I closed Adobe. All right, so I got into Adobe, risking $300, ended up making $700 before commission. And so I entered it on October 12th. Around noon. No, sorry, October 2nd, around noon. Same thing all over again. Got green 10x bars in the higher time frames. Green 10x bars, that's what it tells me, these different time frames where they're green. Price pulled back to the support, bounced, and I've been watching this one for a few days before I entered. And then whenever we had that, when the market pulled back pretty hard with the tweet about the stimulus being pulled away, that sounds like, all right, time to look. So I went looking at Adobe, and lo and behold, we got down, and we're selling off right into the spot where I like to enter. So I was all right. So we're in my zone to enter. It did bounce, and then honestly, it didn't go a whole lot after that. It did just stay low. It wasn't looking too good at the time. And so yeah, I was waiting for that, and then as it's going down, that's when you get the most premium, when you enter the put spread. And also right here on my Squeeze Pro indicator, you see momentum is shifting higher right here. It's right at my 21 and 34 EMA levels where I like to enter. And just like it shows right here, I entered as it was coming down, and I sold the 480 because it was below the 34 EMA. It went sideways, and as I went up, I ended up closing it for 50%. Not a bad little trade, easy. And I already talked about Visa and the SPX hedge. So I did put butterfly as a hedge just in case the way everything's getting crazy. So what I was looking at was, that is not a very straight line. So there's that resistance line. As it was spiking up, I entered thinking it was resistance because it does kind of look like it could have held, especially after it started coming down. But anyways, I was targeting 3,300, 3,350, and 3,250. So if we were to have a bigger pullback, I could be hedged with my long positions down to that level. So that was the plan there. But obviously, once it broke out, I ended up closing it. And for some reason, it is not showing my triangles for when I exited the position. But anyways, I ended up losing about $121 on it. No biggie, small price for insurance. And yeah, that's all for the trades that I was in for last week. Now let's talk about going into next week. All right. Not going to be watching that. I, for one, am probably not going to be entering any trades next week. For one, if you're familiar with what a high water mark is, it's basically a benchmark you need for prop traders. If you're above it a certain amount of times, then you get additional capital. And the way the firm I trade for does it is every options expiration Friday, if you're above your high water mark, by that time it like counts towards you, right? So I'm above it right now. It's basically wait the clock time. Basically, I might as well, with it being so choppy, I might as well just wait to see or wait till Friday so I get, hey, I was above it for 1 month, then I do it another month, then I get a promotion. But also, another reason why it is worth waiting. So we'll go ahead and look at the futures first. This is something I am looking at. And it has me thinking a pullback and perhaps even a larger than normal pullback. I'm just going to use this one for this one little example, and then we'll move over to the SPY where I don't have as much stuff all over it. So it does look like an inverse head and shoulders breakout, right? So like here's a shoulder line. We have the head right here, shoulder, shoulder. We broke above this line, and off we go. And we also have our first green 10x bar right there. It's telling us that ADX is now showing momentum to the upside. But there's a but on there. Look at the volume. It is below average. The average volume is that line that's going across, and we have not touched it. Let me go to we'll go to SPY. Same thing here. Whoops, sorry about that. That is because of alarm that's on there. But same concept. Or because obviously it's the same thing as the futures, right? But we got the head, shoulder, shoulder, resistance line, head, shoulder, shoulder, resistance, below average volume. But actually, let's see if thinking of something. So these fib levels are no longer really valid. So we come here, if we get the high, too low, and so now this is what I'm gonna look for. That all makes sense. This level right here, the 786 retracement. So with the low volume rise, we could potentially come up, test the 350 level, and then roll down, maybe test these moving averages, maybe go a little further. it's hard to tell with so much uncertainty and the way the market is going to be so tied politically. If you think about it, when 2016 happened and Trump got elected, the market did nothing but rally. Like, that's why I call it the Trump rally. It went up all, 2016, or the end of 16 and through 17, and I believe 18 too. But nonetheless, it's called the Trump rally for a reason. Now, if you take the person out of office, the reason it was going up, then naturally it may just go down. Not to get into politics, but that's a very good possibility. But if you look at it, like I said, it's a low volume head and shoulders breakout. It's something to consider. So I'm just going to be watching. I do like a few that I have been watching. Like, I'm going to have to be disciplined not to pull the trigger because I do like to trade. I have been known to take an impulse trade when I shouldn't. But let me fix this. I am liking spot squeeze as it is. The moving averages are now, the momentum is now positive. We bounce off the bottom, we're coming up, we're consolidating. We got an early end signal right here, where that's where that dot means. Looks like we may break out or we may not. The weekly over here looks great. We just pulled back to 21 EMA and we're bouncing higher. I do like spot, but I also am cautious. And then another one is ADSK again. So this time I'm not thinking about Iron Condor, thinking about potentially putting on a credit spread down here below the moving averages with the squeeze. So we have a squeeze with momentum going higher, early end signal right here, and it may go sideways or higher. The weekly chart over here, see, just price pulled back to the 21 EMA, we're going higher. So they're good setups, but I'm cautious because, as they say, a rising tide lifts all boats, the same as the tide goes down. If the market goes down, it doesn't matter what you're in, everything's going to go down. But I want to watch the market, so that's something to think about. Watch the SPY for that 350 level. Watch it, see what happens. I mean, it does look good even over here on the squeeze chart. Like, the daily squeeze did fire. But is it just going to be enough to hit here? If we start to hit this level, but then we start to get the dark blue candles that are right here, but over here, I'd say we may roll over a little bit. I don't know. Only time will tell, right? But anyways, if you have any questions, please let me know. Write them in the comment section below. If you're new here, subscribe. Tell me what you like about it, what you didn't like about it. If you're if you've never used TraderVue before, but you are interested, look in the description link below. I'll put a little link down there where you get $10 off on your first month. And so, yeah, everyone, enjoy the rest of your weekend and stay safe out there. Bye.